MPI family, let's talk about the Federal Reserve Bank and interest rates. Check it out. Wednesday, May 1st, the Federal Reserve Bank met to discuss what they're going to do about interest rates, whether they're going to increase them, keep them the same, or lower them. 9 out of 10 economists said that they're going to decrease rates. However, I actually disagreed with 9 out of 10 economists. I felt that they're going to keep them the same. Let's see who was right. Check it out.
Today, the FOMC decided to leave our policy interest rate unchanged.
Ha! Come on now. See right this right there, right back there? That's where I want to, next time you see me, I want you to pat me on the back. Because you're doggone right I was right. They kept them the same. But Ryan, what exactly does this mean to me? I need to explain it to you. Let's talk about the Federal Reserve Bank. The Federal Reserve is the central banking system for the United States of America. Their primary purpose is to maximize employment, stabilize prices. Matter of fact, if you've been a nerd like myself and actually like to watch the presentation of the Chairman Powell and what he had to say, he repeatedly said that 2% is the target inflation rate. Don't know if you remember, but a couple of weeks ago we did a video. Check it out in the archives if you didn't see it, about CPI. Well, analysts in the previous announcement for the Consumer Price Index expected inflation to come in about 3.4%. Well, it came in at 3.5%. Not a real big significant difference, but definitely moving in the wrong direction, a little bit more than what analysts were expecting, which is exactly the reason why I said it's no way in the world they're going to cut interest rates. Because as you cut rates, it might boost the economy a little bit, but overall, inflation is still a concern, so my prediction was, correctly so, to keep interest rates the same. And controlling interest rates, raising them, keeping them the same, or lowering them, is one of the few tools that the Fed can use in order to control the economy. This is how it works. Let's explain. So when we're talking about interest rate, there's a specific rate that the Fed can use to help control the economy. It's one of many tools that the Fed has, but we're going to focus on this one for this video. It's called the Federal Funds Rate. Not fun like having a good time, but funds, F-U-N-D-S. This is the rate that the Fed control that allows banks to determine the cost of which it lends to borrow from each other overnight. So, if the Fed raises rates, that makes it more pricey for banks to borrow from each other. So banks are going to say, hey, it's getting a little bit too pricey here for me to borrow this money. So let's slow down a little bit if the Fed raises rates. And, as you use your credit card, you might say, man, I'm a little bit scared to use credit because rates are going up, so I might not borrow as much money. And then you say, you know what? To buy that house, I wanted to buy a new house, but mortgage rates are a little bit higher, so I might be a little bit more hesitant. So all in all, as the Fed raises rates, the overall economic activity slows down. And that's what they try to do to control the economy if they raise rates. Or if they decrease rates on the other side, that means it's a lot cheaper for banks to borrow. So banks will say, hey, you know what? Rates are a little bit lower. It's cheap for me to borrow. I'm going to borrow more money, more capital flowing through the economy, right? Or with you and your credit card, interest rates go down. It's a little bit cheaper for you to pay back that credit card, lower rates. I might be borrowing a little bit more. Or in terms of a mortgage, if interest rates are lower and you want to buy that first home, want to buy that brand new home, which many of you talked about, interest rates are lower, I might want to see about go ahead and purchase that piece of property now. Or you'll be more prone to do so because rates are going lower. So that's one of the tools that the Fed can use to control the economy, which definitely has an impact on your pocketbook. So let's go into some real quick tips on what you might want to think about if the Fed increases rates. Check these tips out. The Fed increases rates, you definitely have to review your debt. The interest rate just got a little bit more pricey. You should also evaluate adjustable rate loans if you have them. Those rates are going up. They got more pricey. You should also revisit your saving strategy. Interest rates going up mean that you might be able to earn higher yield on your investments. Interest rates going up, definitely see if you need to rebalance your portfolio. Higher interest rates impact asset classes differently. So you might be a little out of whack. So check it out and see if it needs rebalancing. And then lastly, consider long-term savings options. You want to maximize your qualified accounts and tax advantage savings accounts to really maximize your overall investment return in a rising rate market. So conversely, here's some things you might want to start thinking about as interest rates are going lower. Check them out. As interest rates decrease, you might want to consider refinancing. You might be able to get a cheaper mortgage, a cheaper car note, cheaper rates on your credit card, to save a few bucks in your pocketbook. You might want to take advantage of lower mortgage rates. You've been thinking about buying a house. If you're in the right time and you've been saving and it's the right moment that you can actually afford it, you've done your affordability assessment, buying a house in a decreasing rate market means you're going to have a cheaper mortgage. And you absolutely want to evaluate your investment opportunities. You want to make sure you assess your risk tolerance, diversify your portfolio, because just like in an increasing rate market, in a decreasing rate market, different asset classes are going to respond differently. So you don't have all your eggs in one basket. And then you want to talk to a good financial advisor to make sure they can give you some help in this process. So there you have it, MPI family. It's very important what this Fed is doing, isn't it? The prices that you're paying at the grocery store to the exorbitant prices you all been complaining about at the fast food places, which is why I've been urging you, cook your own meals. The grocery store has not had as high of inflation as the fast food places have. So from the amount of money that you have to pay back on your credit cards, from the ability, I've helped a few of you with your refinancing, the rate that you got is depending upon what the Fed does in a large part. Also in terms of different rates, many of you want to buy new homes. The rate that you have to be able to get on that mortgage and how much you have to pay on that mortgage. The Fed has a big influence on that. So it's very important to keep abreast and follow these things. So as a matter of fact, I'm laying out a challenge. June 11th and 12th is the next FOMC meeting. The next Fed meeting is June 11th and 12th. On the second day at 2 o'clock, they're going to come out and have an announcement of interest rates. So June 12th at 2 o'clock, the first one of you that emails me and tells me what the decision of the interest rate was correctly gets a $50 gift certificate from Amazon. From me to you. The first one of you that gets it correct, and you email me, you call me, whatever it is, the first message I get, you say, Ryan, the Fed's decision was this, and you're correct, $50 gift certificate from Amazon. The second and third one of you that reach out to me gets free books from me, signed and autographed. The fourth and the fifth one, and everybody else, y'all get a hearty congratulations. And I'm going to see about other future contests that we can participate in. Because I really think this is important that we engage in this process so you learn about the FOMC meetings and learn about the Fed. If you have any questions about this process or where to watch it or how to watch it, I'll send you links. I'll send you whatever you need. They've got websites. They've got television and media. They'll be covering this for sure. It's going to be a big one. Everyone's going to be watching and seeing exactly what the Fed is going to be doing on June 12th at 2 o'clock. You should be too. All right? And of course, as always, if anybody has any questions, comments, concerns, thoughts about next topics you'd like to see at the future workshops, you want to set up some office hours, hit me up. Text me, email me. I'll be around. Peace.